Hey, good afternoon. Mark Milam here, May the 28th, coming to you with this week's interest rate summary and market update from Highland Mortgage. So let's talk about what we're facing going into the holiday weekend. So interest rates have remained relatively calm this week. This is the past 5 business days located right here, and you can see had a little run up to start the week where mortgage-backed securities were trading up in value. Anytime that happens, interest rates are improving. So a nice start to the week. And then Wednesday and Thursday, mortgage-backed securities were selling off. We saw interest rates tick back up, and essentially we're closing out the week where we started the week. And this is not a bad thing. There wasn't a lot of volatility here, not big upside, no big downside, just a very narrow trading range for mortgage-backed securities, which represents very little volatility in interest rates. And quite frankly, that's welcome news as we head into the heart of summer. Folks are still able to avail themselves of refinances. Purchase interest rates are really, really low, down in the low 2s for the shorter term instruments, up in the high 2s for the longer term instruments. So all of that is fantastic news, but that is not the name of the game right now in housing. The name of the game, as we alluded last week, is inventory. Of course, everyone's talking about the inventory problem, and really we got another indication of how that problem is affecting the housing market more globally this week when we got our pending home sales report. Now, pending home sales, we're talking about homes that are already in existence. This is not new constructions. These are existing residences, and how many contracts are written in the month of April as compared to the month of March. Now, estimates were, all the experts were estimating that we would increase by about 0.8 to 1.0%. Not a crazy number, but an increase in terms of contracts from March to April of about 0.8%. That is not what happened. We missed that big time, and we'll show you that here. Pending home sales declined unexpectedly. So you can see from March to April, we actually dropped 4.4%. So not only did we not get an increase, we dropped over 4% in terms of March to April for pending home sale transactions of existing homes. That's a terrible sign. That's not a good sign for housing. And what's at the root of that? Lack of sufficient supply of affordable homes. And we can anybody who's been around this industry or even knows someone who's been around this industry can talk to the problem with inventory in major metropolitan areas, not just Atlanta, but all major metropolitan areas are seeing this. Bidding wars, some home buyers getting priced out of the market because bidding wars have gotten so high, and they're just going to the sidelines to wait this out. That's a significant problem for the housing market. Obviously, it's a significant problem for the economy, but there seems to be some hope on the horizon. So where are we coming from there? Well, first of all, let's just say this. There's no expert here. There's no expert here that lived through the last pandemic and can speak to exactly how an economy recovers from a housing perspective from a pandemic. We just don't know. We've got good indications coming, but we don't know definitively what's going to happen. But here's the prevailing sentiment. The prevailing sentiment is we're going to expect to see supply of available homes improve perhaps as soon as autumn. So we're talking Q3 and Q4. We're pointing to the growing comfort level on the part of homeowners to have their homes shown to buyers. Now, obviously, in the middle of a pandemic, no one wants a buyer traipsing through their home, but now that 40 to 50% of the country is vaccinated, hopefully about another 10% have gotten their first shot, homeowners are starting to feel more comfortable putting their houses on the market and allowing people to physically come inspect their house. So that's a big sign, right? Obviously, there's also a comfort level there in your occupation, in your job. If you're feeling more comfortable in your job, you're going to be willing to stretch and go to that move-up home. Also, one thing we didn't talk about last week is the conclusion of the eviction moratorium as borrowers exit forbearance. So we've got a lot of people who put their mortgages into forbearance. We've got a lot of people who are renting, who haven't been paying their full rent, and they've had this moratorium on eviction, and that's starting to expire all around the country. There are certain cities, municipalities that have different moratoriums on evictions, and they're all starting to expire. It's going to be an interesting exit of the moratorium because all of this additional supply is going to hit the market sporadically as we move through the Q3 and Q4 of 2021, excuse me. That's going to be an interesting thing to watch as we move forward. Of course, in the meantime, if you are out there looking, you have got to avail yourself of day one certainty and work with a lender that leverages day one certainty so you can not only be pre-qualified the first time you talk to a lender, but you can be conditionally approved for the loan just pending upon finding the collateral, which is the property itself, right? So if you have any questions at all about that, about getting a conditional commitment letter, about day one certainty, or putting yourself in the most advantageous place to purchase a home, don't hesitate to reach out. Mark.Milam at highlandmtg.com, 404-395-1102. Happy Memorial Day, everybody.